Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hello, everybody. Welcome back to another year on my episode, and Happy New Year to everybody, and wishing you a wonderful and prosperous 2021. Basically, for the past week, I've been, almost 2 weeks now, I've been sort of revising and look at my old charts and stuff and my past trade, and I think that's been quite good for trend followers in general. I think for last year, basically okay for me anyway, and I'm hoping next year will be even better, but we'll see how it goes. But generally, end of the year things I did it last year as well, and year before. I just review stuff, and depends really on my time. So I spread over mostly from end of the December to January. Just look at my past trade, what I can learn from it, what my mistakes are, and so forth. For this week, basically, still continue reviewing. But wonderfully, for the past week, there's not much happening in the market, so I got a bit more time to revise things. I mean, Dow Jones has been up and down as usual, but it slowly broke above this rising wedge rather than going down. It's gone up to I think at the end of Thursday, which is a half day before New Year's, comes in, and it basically is on 30,600 ish area. So for the whole year, it started around 20,800 ish. So it moved up like just under 2,000 points for the whole year, and a 6% up for Dow Jones. So it's not bad, considering what we have been through. We're still going through the pandemic at the moment, and America definitely got devastated, and it's still continuing. And but for some reason, obviously because of the Fed and the money basically sent around the whole countries and into the stock market, and other world banks also do the same. So the Dow Jones, Nasdaq, S&P 500 all gone up. I believe they all gone make some positive territory this year, last year 2020, and all make money. So if you have basically followed through the whole year just buying a simple index, you'll make some money. However, the ride, this is a roller coaster ride, it was not very funny, and some of us is lucky enough to still have a job. A lot of people, unfortunately, around the world lost their job because basically the whole industry, a lot of travel industry, hospitality industries all stopped because just people not going out, worried going out, not just international travel, but even within the country, just worry about catching the virus, and so this is not something to see there, but even all that's what's actually happening. It's a God bless that at least all the major indices around the world, except Hong Kong, has ended up with a positive net result for the year. And overall, this week, like I said, there's hardly anything happened. So on the money side, except Dow Jones pointing out, but it just it does make me feel weary of what's actually happening, similar to what happened back in early 2020, when everything looks very fantastic. But the fact is, at this moment, juncture in time, the stock market got up so high with the fundamental economics of the country, not just US, UK, around the world, Europe, with so many things that are still problematic, so to speak. The pandemic still raging around. We have the vaccine, we just recently rolled out in US as well as in Europe. We're not quite sure how good it is at the moment, and for the stock market to come up so quickly and so much. Well, not quickly. It's been spending the last 6 months or so going back upward, but to actually broke a new high. It's something to worry about because we doesn't have the fundamental of the economy to actually to support it. So yes, there's a lot of people making money out of the technology shares of Nasdaq, but what about the general economics of the whole country, whole world, so to speak? You see the divide between the Asia country who is making money, or at least starting to get back on this even keel, but Europe and America is not. So for the US to have such a high Dow Jones values, Nasdaq especially, is a bit worrying. We just have to wait and see. As far as trend foreign concerned, I don't really care. I just need the things move. But we're having seen the devastation of the COVID-19. I just don't know how the market in Dow Jones can actually go up so much, but who cares at the moment. But when it come down, I mean, sometime in the future, the reality will struck, and I think there will be some sort of correction, but who knows when. When that happens, it could be quite huge because we're gone significantly far too high at the moment, as far as I'm concerned. Because we at the start of 2020, we just have U.S. and China sign the first stage 1 deal. We have a tinkling event of the COVID-19 coming out from China, but nobody really looking into it. Worry about it until March, but that's before all the big hoo-ha happens in the stock market, and that is at least the economy is going on. Now we have the COVID-19. The economy is not running. We have blame game going on between China, U.S. blaming China, Australia blaming China for the COVID-19 and so forth, and the China's fighting back. And a lot of instability also in Hong Kong as well. I just wonder how things might turn out for next year as well. But as far as I'm concerned, at the moment, the stock market around the world is showing us as like a voting machine. Everybody is not seeing all these gray rhino, so to speak, all this stuff that's still hanging around that could have a huge impact of the stock market, but nobody is looking at it in the stock market. And just thinking the vaccine will help us to get back out on the street, to go back to work, and all the economy will recover quickly. And of course, the stock market always forward-looking, but it can also get wrong too. So however much it's forward-looking, it still has to have the economy behind it. So just a way to see what happens next year. The other thing, big thing that happens, I think it's on Wednesday. I think a couple of weeks ago as well, you have noticed the German government basically signed into law or something that allow Huawei from China to take part in its 5G infrastructure in Germany, which is against what the U.S. President Donald Trump keep on telling European what to do. I mean, the UK government has followed through. They basically just followed that and ban Huawei. And the funny thing is, they give time for Huawei to do the telecom company to wiggle things out back until 2027 or 25 something. But let's give them a few years to replace it, which is fair enough. Instead of just say no everything right away. So, but for the German government, it had basically gone ahead and signed the deal with passing the government to say Huawei can take part in its 5G network. I think that is because personally, I think my personal feel is that because of the U.S. is stabbing the foot into this Nord Stream 2 pipeline, transporting gas from Russia into Germany, and threatening the whole project, and basically say sanction the project, and basically say anybody who helped to build this pipeline project, any U.S. government, any U.S. company or anybody using U.S. dollar or whatever will get sanctioned and so forth. And I think Germany got really upset about it because this is between two Soviet nations, two different nations to basically have its own a discussion for economics means for cheaper gas transport from Russia, but U.S. basically just say this is national security, blah blah blah, for the security of the NATO, whatever, an excuse, just try to stop this whole thing going on. And even Germany have put a bribe, I believe it's $1 billion to tell US, if I give you this money, can you please stop, kind of thing. And Germany's already, basically bowed down to against the pressure from U.S. government to basically put some money up, bounty money up, to hopefully can buy some peacetime from U.S. But U.S. continue, and basically Germany is a nation themselves. They got a group of people in themselves to think for themselves, for their own economy. Basically, Germany just say, okay, if that's the case, then I just go ahead with whatever I need. So Germany signed the deal to let Huawei come through. Now on Wednesday, they signed a investment deal, the EU-wise, not just Germany itself, but the whole EU. Of course, France and Germany is in it. and basically allowed a greater access for the Chinese market from Europe, and Chinese basically government just want more access into the energy market within the European countries. Unfortunately, because of UK have exited EU on the 30th of December, I believe, only 3-4 days ago. UK is not going to benefit from this deal. But overall, I think this is a general sign to say that Germany, which is or Europe in general, is an ally of US and has been bullied enough by Donald Trump administration, by US government, and they basically say, okay, I'm going to do whatever I need to do to help my own countrymen, and then the whatever US said, it's a good suggestion maybe, but it is not going to even listen to US anymore. So it's quite a divergence away from the US, and it's basically a step to President Donald Trump's face. Basically say, stick two fingers up his nose to say Germany is going to do whatever it needs to do for its own good, so to speak, and buy cheaper energy from other country, as well as better access to 5G technology or telecommunication technology from another country, in this case China, irrespective of what US said. I think that's the general stuff that in bubbling around within around the world. But I think Germany is the first one, and then now Europe is the first one basically stand up against the US to say, look, my own interests come first. If you say US American first, you're putting everybody else, including your ally, and ally just basically say, well, I want myself first as well, because this is for Germany anyway, it's good for the economy. For the EU, it's also good for the whole economy, given the devastation of the COVID-19, the Chinese market opening up for the European countries to go in the Chinese market, greater access to it. It's definitely a better thing than isolation and not going into the Chinese market at all, which is, we all know, it has the biggest middle class. Emergence middle class. We have loads of money to spend on online as well as on traveling and so forth, and Europe is going to take some money out of that, to eat some pie out of that thing, and US can do whatever it wants as far as Europe and Germany is concerned. They really have enough for US as far as I'm concerned, and that shows up a lot. Unfortunately, UK, as I say, because it's out of Brexit deal. Out of EU because of Brexit deal at the end of the 2020, it cannot get any benefits from this EU-China investment deal, so to speak. And UK will have to find its own deal with China, but I don't think it will be easy for UK, even though I'm British. I can see, because UK is always many people say that in UK. UK is always following the lead of US. We call it the lapdog of US. Basically, this so-called special relationship is US is always the big brother, UK is a smaller brother, and whatever big brother said, UK will follow. But unfortunately, this is upsetting Chinese in the form of Huawei, as well as the Hong Kong issue, security issue, whatever it is you call it. But overall, I personally, I think UK will suffer from the Chinese anger because Huawei is not allowed to take part in any of telecommunications setup, even though it was allowed before by UK government. But I believe it's the US pressure on the UK government, basically make UK government change its mind to stop any Huawei kit, even in any telecommunication company in UK. And I think UK is going to pay for it. Simply put, you just look at what happened to Australia when having a diplomatic spat between Australia and China over a number of things, meaning about the original COVID-19 or checking the COVID-19, is it origin from, is it from China, whatever. It angered China. And China basically just said, okay, if that's the case, you are so not very nice to me, I'm not going to buy your stuff, and I'm going to tell my own countrymen or students not to go for your place. And I think it will be a similar thing play out in UK, and UK will suffer from the Huawei deal, because I think Huawei is always trying to reduce its workforce in UK, because if UK government not happy with it, not welcoming to it, it will just go and go to Europe, go to other countries, welcome its business. And secondly, and it will also, I think China will just say, okay, if that's the case with COVID-19, this new strain of COVID-19 that's actually happening is spreading in Europe, they will just basically set its own students within own country and say, no, be careful when you go to UK. Also, when you visit UK, be careful of it. And I think there will be a significant, over the years to come, the reduction of foreign students from China as also foreign visitors from China. People will still come over in UK, but not as, so much as before, because when US was having put a bit more, try to have a tougher stand on on China, one of the things that got devastated was the amount of Chinese students actually go for the US. And because of this spat of trade deal and so forth, a lot of Chinese students actually went to Europe, and UK is one of the most beneficiary of that spat between US and China. So a lot of Chinese people have come over to UK, which I've seen myself. I'm in Bath in UK, and it's a tourist town. And we've seen loads of Europeans and Russians and other people before, and now see loads of Chinese. Used to be some Japanese as well. Now loads of Chinese around. But I could safely say after the pandemic, I think the Chinese number probably go down a bit, and that means also to the Chinese students as well. It's all my speculation, but I think from what the Chinese have been doing, the second half of the year is more focal and more pushback to anybody who's not happy with China. And basically, China knows that everybody and its dog knows China has a very big middle class and wealthy and up-and-coming middle class. I want to buy loads of things, they want to enjoy themselves, just like any other country's middle class would do. And it's because of this own population, it has a very big market, big middle class segment, and want to buy things from around the world. And Chinese government basically use that to say, okay, if you are not happy with us, or in other way, poking at us, still want us to give you money and trade with you, but basically say, okay, if that's the case, and I just want to trade with you, and we trade with other people, UK is going to suffer. And because now it's also away from EU now, this EU-China deal definitely is not going to benefit UK, which I said before. And just at this, I think UK will have a much difficulties trying to talk to China. I remember, with all this, I'm personally from Hong Kong myself, with all the security things, talking about Hong Kong stuff. For some reason, everybody's and its dogs and East, basically in the West, forgot how Hong Kong come into become a part of UK is because opium. Basically, Britain know that it is wrong. It's growing opium and have it in India, growing India, and then send it to China, try to weaken the country. The Chinese government at the time, the Qing dynasty, tried to fight it off, lost its war, and being asked to pay money for loss of the opium, and part of the deal was taking over Hong Kong. And it's years ago, this 150 years ago history, but for some reason the West seems to forget about all this stuff, the shameful past. Very much like Black Lives Matter, people talks about black being taken from Africa and into Europe, and in Bath and Bristol here, used to be in history is a vibrant trade of black people, slave, which is not good, and so is US. All this somehow, now seems to be on the top of the news or something, or people don't have a right balance to thinking, have a balanced view of what other people's views of the expansionism, imperialism of both Europe and as well as US in a sense as well. And we just have to wait and see what happens to UK's end on this one, all this history and overall. And sometimes I just feel unfortunate for UK, even though I'm a British citizen, that government point fingers to China, to Hong Kong, and they forgot what they have done to China themselves, going to the Forbidden City, stealing things, just like, very much similar to India, bring the war over there, fight the local warlords or local states, and then, bring all this treasure back to UK. If you go to UK National History Museum or just general the British History Museum, a lot of the stuff are taken from other countries, from India, from Egypt, from China, that kind of things. But that's just our past. We just have to wait and see how we will handle the Chinese retaliation, so to speak. But that's basically what is more or less happening this week. But unfortunately, one more thing I need to bring up is, which unfortunately is good, is that suddenly Bitcoin has gone past the 30K mark. It's broke above the, I think back in like August, September time, it broke the 10,000 mark or 12,000 marks, and then it broke a couple of months back 20,000 mark, and now I think on Saturday it broken the 30,000 marks. It's gone, I think at the moment today is on Sunday, it's brought up to 34,000 US dollars per Bitcoin. And it have gone down a little bit to around $32,000. But we just have to wait and see what will happen next. But the moves, and once again, is a lot of people predicting to go to moon 40,000. Like I said before, who knows? I hope we go into moons, but I still don't like the look of it at the moment. It's very much a parabolic move the last couple of months, weeks, so to speak. But as far as I'm a trend follower, I don't really care. I just want the damn thing moved. It moved. But I think one thing I have said that before, when the whole Bitcoin move, the recent move go tits up on banana belly up, be careful and just get out and move the other direction if you have to. Don't always stay in and hoping that the market is always go up. I mean, sometimes market go up to extremes, so it go extreme high and go extreme low. We've seen it back in March 2020, April 2020 as well, and then it got an extreme high now to early January in 2021, and Bitcoin gone to above 30,000 mark, which is fantastic for trend followers. But really, this is just show another way of how the market in general sometimes, or a lot of times, is being pushed, moved to extremes, both up and down by emotion. But also this time Bitcoin, I said before, is a lot of retail traders are not actually in it. It's really big, mainly controlled by a lot of big boys, so to speak, financial companies rather than the retail this time, that's what happened, I think, 2-3 years back when Bitcoin initially gone to like 19,000 and then came down very quickly. This time it's different. It's not driven by retail investor, but by big institution, financial institution. And the way they always play games, just like the subprime market and stuff, it probably will just continue push to extreme until then there's no more it can push, and everybody just get out. So this parabolic move smells to me and look to me, it's more like a 45-30 degrees. Sorry. It's more like 60-70 degrees moving up kind of thing. All this parabolic move upwards always end badly. Okay, even if it can hover around, go sideways, could become sometimes. These energies, these people, whatever, beacons got sucked in. It just give us a illusion of everything is great with Bitcoin, but as far as I'm concerned, it's good to trade it. It makes me a lot of money. I think it makes a lot of people lots of money too. But just watch out when it turns. Get out. Okay. So here's basically the end of this update. Next is the update of my portfolio coming up. Okay. First off the bat is Apple. And just like last week, it's just still buy across the board. So short term, medium, long term is still buy. After that is Amazon. It's short term, it changed to buy now, thanks to recent slow move up, broken the rising wage I talked about on the Dow Jones, and Nasdaq continue, I think, gone up to like 12,800ish and come back down 12,700ish. So it helps the Amazon price to basically change from sell last week to buy this week. Medium term is still neutral, long term is still buy. Next is Australian dollar to US dollar. Is buy across the board. Is at the moment I think it's 0.76, 0.77 around those areas. So like I said before, the US dollar index is weakening and continue weakening, and this week it has been down. It tried to go, I think last week tried to go back up above the $90 mark. Unfortunately, it failed to hold up and then gone back below 90, and it's around 89 50 or 70 area. So this is benefiting basically anything that rate in US dollar would increase in price, and in Australian dollars have benefit from the weakness of the US dollar. So it's buy across the board for Australian dollar. But unfortunately, this also means that anything rated US dollars gone more expensive, including exchange rates, and that means US dollars is cheaper for export. Australian dollar is more expensive for exporters, for Australian exporters, so making it less attractive. And it's not affecting just Australian; it's affecting Europeans as well. Chinese dollar and British pounds as well, that kind of thing. And effectively, I think it's once again, it's playing games. US has always been doing that when you have some sort of financial meltdown. It initially tried to get everybody get into US dollar. The US dollar index always gone up and buy US dollars domain shares and stuff, as well as government bonds and things. And then later on, they just let the market and try to drive the market down using whatever economic news, bad news it is, and then the US dollar's gone down the pants. So effectively, as far as I'm concerned, there's a lot of commentators in Europe and Asia as well talking about it. Is that the U.S. government is basically taking money from the rest of the world to cover its own hole that it has generated, pothole, and a lot of empty space that need to be filled in a black hole financially, need to be filled in by other people, and in this case, other countries. And anything that's US dollar, if you got some US dollars, you purchase some US dollar bonds or whatever shares and stuff. But even if you has gone up, with Dow Jones gone up so much, Nasdaq gone up so much, but if the exchange rate is not favorable, that means whatever you're earning over the exchange rate, you are still losing money. So, for example, an Australian dollar, if you continue to strengthen against US dollar, you might make 10-20% of US shares, but then when you go back to Australian dollar, transfer it back and use it back in Australia, the exchange rate makes it maybe only again like 4% or maybe 3% because of the large gain of US dollars, Australian dollars, and the weakness of US dollars. So this is gonna be it's not gonna be good for any exporters around the world. So we just have to wait and see how they play out in 2020. Next is Brent crude. Basically buy across the board, short term, medium term, long term, same as WTI, Western Texas Instrument, crude oil, US crude oil, buy across the board as well. So like I said before, the US dollars continue to weaken. Brent crude and crude oil has gone up, and this is a good thing also to think. Part of my review of my past 12 months trade is look at the devastation of the COVID-19 and what it actually happened and on Brent crude front. And remember all this scared of the Asia is shutting down, especially basically China, and supply chains is not able to send things around in Asia, and therefore not able to send things around to Europe and US. And with so much hoo-ha going on with the spat between Russia and Saudi Arabia, and Saudi Arabia wanting to cut crude oil production, and Russia doesn't want to. I think that's back in April time, and then obviously US very quietly just continue or even increase its own output of oil, especially the shale gas oil industry, and not willing to cut it. And basically the Saudi Arabia and Russia just have a big spat and causes a big hoo-ha on the drop in price of Brent crude and WTI around the world for future contract, because Saudi Arabia say, okay, if you don't cut, then I'll just go open my reserve and open my tap, so to speak, and increase production, and that drive the crude oil down. And then suddenly, if you listen to one of my podcasts, is also a CME, the exchange for that dealing with crude oil in US. Basically changed its own internal rule. and allowed this the crude oil future instrument to go negative. Now, not many people knows about it, and then even the newspaper didn't say, "Oh, CME changed its rule, allowed this product which have never allowed to go negative before, suddenly go negative," and they've done it quietly. Lucky enough, I was listening to some Asia commentators talk about the sudden change of the CME rules, because some of them actually worked in the financial industry and got a funny email from CME to say, in about 2 or 3 weeks that we're going to change this rule to allow the Brent crude and WTI crude options, futures options, and so forth to be allowed to go. I think the future market to go negative. That was sort of after the spat between the Russia and Saudi Arabia, and basically is one more thing again to the regulator themselves, even the company CME, to create a product for futures, changes the rule, change it quietly. Only people who is in the industry knows about it, or financial industry knows about it, and it's allowed the futures of the crude oil to actually gone down and driven down to minus. Remember, it was gone down to minus 37. Some of it even talk about minus 100. Some commentator, and there was pictures on BBC News saying all these oil tankers packed outside Gulf of Mexico or something, waiting to be processed, because it's just like nobody using the oil, nobody's really want to process it, and the storage capacity in US was to the max. It's 98%, blah blah blah. Then suddenly, after all this price gone down to negative, it come back up again, isn't it? And then why now people not talking much about the storage? With the world still halfway locked down, a lot of people not doing international traveling, even local in the countries, a lot of lockdown in Europe and some states in US, I believe. And the two things people didn't talk about much is the production of extra crude oil in America, and also the storage issue. And that somehow suddenly gone out of pants. Now that shows you how news, some, I wouldn't say that far, but I would say, some funny characters or somehow some funny news comes out to drive the crude oil price down, and then somebody actually benefits from it. And a lot of people, I'm sure, have benefited from the sudden, drop down in price in crude oil, and then reverse the trade when the price slowly go back up again and make loads of money out of it. So at the moment, we have lost 9 months after March, April, and you look at the whole thing, it's like this sudden hoo-ha, and sudden news-driven situation, and a sudden change of rules. Even the regulator, the company that created the CME, the future product for these crude oil instruments, changed the rules without actually broadcasting it to tell the world, I'm about to change it. It's a bit like, how the financial industry can just change the rule overnight and just steal your money. And a lot of the oil ETFs in Asia got suffer because of that negative, gone to below zero price back in April time. And this kind of thing, for some reason, near the end of the year, nobody talks about it now. We still have, I'm not sure how much shale gas is still being produced in the US, probably slowed down a bit because a lot of people are out of jobs and so forth. And the cost of oil production probably is still below whatever the current price is from the market. But what happens then? Nobody seems to talk about it. But as far as I'm concerned, I'm a trend follower. I just follow. And Brent crude and WTI crude oil price continue to recover since April. And it's more or less hover around, more like a little sideways trade. It's not the rate of change increases. It slowed down quite a lot in the last couple of months. But it's still above the 200-day moving average, above 50-day moving average, with the US dollar index going to, hopefully, if my thinking is correct, weaken further to below maybe 88, maybe gone to 85, that kind of area. At the moment, it's around 89. The US dollar's weakness is going to cause, you got it, Brent crude oil and WTI crude oil to shoot up, just like gold and other thing, anything rated in US dollars. And so this crude oil trade, as far as I'm concerned, still got legs for 2021. So watch this space and don't get out of it, and just use your system, follow your system, and don't let this stupid funny news actually happen in the financial industry to try to shake you out. Next is DAX. short term is changed to buy, medium and long term is still buy from last week. So overall, it's still moving up, just following Dow Jones Q. I think the EU and China deals definitely helps it, even though it has devastation of the COVID-19. But I think overall, with there's a lot of optimism that the US, not US, I mean the EU and China deal will help bring in more money into Europe, and we just have to wait and see how it goes. Next is Dow Jones. Like I said before, is broken the rising wedge formation. They've gone above 30,600 mark, and so therefore short term, medium term, and long term is still a buy. So just continue from last week. Not much changes here. Again, similar to Tesla, I just don't like the chart formation. But as far as I'm concerned, I'm a trend follower. I don't care. But one rule that always stuck in my mind, always I follow, is when the market turn, when your system say go and get out and reverse, then get out and reverse. Don't feel love about it. Don't just because some other people news like crude oil just talk about somebody say this or that. If the price actually says something and your system, the price of change, your system use that price to come up with a signal. Hopefully it's mathematical that you can scientifically test it out, back test it and everything. And then when the system say get out, then get out. Do not, and I repeat, do not fall in love with any prices. However fantastic, fluffy news that is out there or negative, just watch out your system. Your system say when the signals change from buy to sell, sell to buy, get out and reverse. Okay. Next is FTSE 100. Short term, medium term, and long term is all buy. Short term wise, if similar to DAX, have moved out from sell to buy. I think the Brexit, basically the deal that's signed on last Thursday, definitely make lots of people very happy about things. So it's doing pretty well. Okay, next is gold, and it's similar to Bitcoin. I think overall is moving up, and short term is a buy. Medium is still neutral, long term is a buy. So it's hovering around the 1900 marks. I think it's about to break in Sunday night now. So I think when I last checked about 20 minutes or so ago, it's broken above the 19,000 mark. But we just have to wait and see. For me anyway, I've been saying I think next year, this year now, 2021, it's going to be a lot more, highlights on the gold side. Last year we've seen not many people talk about. I haven't seen much at all of people talking about copper. It gone up a lot, and hard metal, so to speak, gone up significantly. And if you look at the copper price, you'll be surprised because it gone down like everybody else from February to March because of COVID-19 scare, and it recovered. And recovers everybody else as well. Now I was thinking about it. Who's buying copper? Who's actually building things and sending things around? So it basically, I personally feel Asia is recovering and taking loads of copper and metals and stuff to build things and so forth. And also the US dollars tanking doesn't help lately, but it does make you think what basically happened last year. All these things that a lot of stuff not even talk about from another place like copper. I sort of sometime dip into the copper and tell you a bit of things that I'm tracking and trading. But copper definitely make a lot of money. But I think this year is more of a gold and silver thing. So watch out. As far as I'm concerned, this weakness of US dollars go anything that's US dollar based will just gone up. But that's also an interesting question. If you're a US citizen and your US dollar is weakening, that means that whatever your country is buying from, let's say, the clothing from Indonesia or India, okay, maybe China as well, and because US dollar's weakness, it basically means that you have a more all the imported goods will be more expensive. Okay, so your dollar basically will buy less stuff, so less bang for your buck, so to speak. And that means you will have in US imported inflation because of weakness of US dollars. But unfortunately, the US economy, as we know, even though in positive cases, which nobody really talks about, is how good is the vaccine. Is everybody is thinking how vaccine works, 100% positive scenario. Nobody's talking about what ifs. What if the vaccine doesn't work, only works on people? There is already some vaccines. I think that the Pfizer vaccine that can cause some issues if you have a history of skin problems or something, that kind of things, and it can cause you rashes, and some people give you difficult to breathe and other things as well. Because the COVID vaccine have been tested properly, there may be other things that's still to come out to wash as more and more people get vaccinated in US or around the world. You see more certain type of people cannot take those vaccines. What happened then? And also so many vaccines happening, which like I said before, if let's say US allowed people from Europe who have taken vaccine from Oxford, AstraZeneca and Oxford University vaccine, would that rated them as a vaccinated person allowed to come to US? And as well as for the reverse for the UK and for Europe, where allowed people have taken Pfizer jab, for the vaccine, will be allowed to go to the countries and as having a vaccination tick on the box, so to speak. And let's even play bigger, go to Russia, where allow each other vaccination to be recognized, and talk about China, US. Would they allow each other's vaccination recognized? Is where is WTO? WTO actually even come out to say, okay, these are the list of vaccination drugs that we think working, and if you have injected one of these vaccines, that means you are vaccinated and you have some sort of protection, and therefore should help you travel, allow you to travel, so to speak. And the airline industries can take that to the bank and basically allow people to travel better. But I hope this still will come later on, but that's not even play out yet. And then it's just so many what ifs, and just have to wait and see how this whole thing will work out. And then the US definitely have inflation coming up, and the economy is not picking up at the moment. And even if the vaccination works all 100%, and we have devastation of what is left behind afterwards. A lot of retailers are closing, a lot of people losing jobs, and a lot of landlords don't get payment because the residents, the tenants just don't have a job to pay anything. The shops, the commercial tenants don't have anything to pay because the shops are closed. Not many people come out there to buy things. So it's a lot of hoo-ha's going on. And for US dollars, for the imported inflation, which then means that the US might be forced to actually raise its interest rate, even though its economy cannot take it, because it would take years to recover. And Powell already said, the U.S. Fed's chairman already said, they allowed the interest, the inflation rate to go above to 2%. I think that definitely will be coming next year, this year, next year, and so forth. And then if that's the case, will the U.S. government then say, increase the interest rate? I think they said, fair to say, they will increase the U.S. interest rate until 2023 or something, or 2022. I think there might be a chance of even earlier raising interest rate. But with the economy able to take it, with the current, at the moment, the current situation, with the economy in U.S., it's just wait to see. But it means that in high inflation could also mean definitely, I think, for gold as well. So I think gold and silver definitely play for this year. So just this is my 2 cents worth of the just general economy and things that people need to watch out for. Next is Hang Seng. Like I said, Hong Kong index didn't make any new high this year. Not following is Nikkei or Dow Jones or even India Sensex. But short term has been turned to buy this week, and medium term is also buy, long term is turned to buy. So slowly it's going up. It's kind of late, but it's catching on with the I suppose with the Dow Jones and Nikkei all moving up for quite some time, and Hang Seng now slowly going up. We just have to wait and see what happens next. Nasdaq, like I said before, is buy across the board. Is effectively continue from last couple of weeks or maybe whole month now. So short, medium, and long term is a buy for Nasdaq. Next is Nikkei, similar to Dow Jones. Nasdaq is buy across the board. This another thing with Nikkei. If you look at it, it's been in the uptrend for the past couple of months and so forth, and trend following sometimes, unlike day trading, it catches the mean trend, and we see the mean trend is it can take weeks and months, maybe years to develop. Okay, And if you have basically day trading, nothing against day trading, but you sort of in and out, you need to know when to get in, when to get out, and it depends on your lifestyle and so forth. I would say will it be much easier and better if you just follow the mean trend and trade with the mean trend rather than going in and out of the market so many times? In those days, we had to pay every time when we go in the market and get out of the market, to the administration fees for the brokers, so to speak. But now we don't have that. I mean, with a lot of free trade, so to speak, no commissions, but you still pay by the spread. So going in and out all the time. When you then compare to take a long-term view, and especially if you're a busy person, have a full-time job or very busy lifestyle kind of thing, you don't really have time to sit in front of a computer and just look at the screen and day trade every day. And it's also a lot easier on your mind as well, rather than looking at the screen and hypnotized with it. You can take a more breather, so to speak, and look at a more long-term view, have a think about and so forth, more thinking time than just trading. That's just my view anyway. That's why I sort of like it, because I've got a very busy job myself, very fortunate, and God bless, thank you very much. But also because of my lifestyle, I don't have 2 hours in the middle of the day just sit in front of a computer do things. I just don't have that. That's not my lifestyle at the moment. So the long-term trend following just my taste. Hence this podcast. Next is silver. Like I said, similar to gold, short term is buy, medium is neutral, long term is buy. So watch out for this year, both silver and gold happening. I think if gold is more like inflation play, so to speak, which is coming. But if the economy is recovering, silver also similar to gold have a inflationary protection, but also have a industrial usage. And we sort of know that I think over the weekend, Samsung is saying is export. I'm not sure even say Samsung is South Korea export of semiconductors and chips and stuff to US and Europe, China as well has been all increasing even during the pandemic. So I think the industrial use of silver will definitely is picking up, and as the economy around the world recovers, more handsets being sold, computers and so forth, and we just probably see a recovery of the electronics equipment, so to speak. A lot more faster, and therefore silver is more in demand. So that's some fundamental thing for silver. But like I said before, both gold and silver are my play for this year. So watch out. Next is US dollar against the Chinese yuan. Chinese dollar is sell across the board. Basically, short, medium, and long term is all sell. That means that the Chinese dollar is strengthening. But one thing you need to watch out for, though, if you look at the Chinese dollar against US dollar, there is a sort of like a divergence in the MACD stuff. So for the past month or so, from early December, the increase of the Chinese dollar strength has been halted, so it's gone sideways a bit, and that means the against US dollars is sort of a little pause as far as I'm concerned, but also with the MACD having a divergence on the MACD histogram curve, I think is watch out for a little rebound. I'm not sure how big the rebound is, because I think the US dollar is my thesis anyway, that will continue weaken into next year, into 2021. So I think this temporary pause might be is just temporary. So but whatever it is, the price said, change price and the system say get out and get out. So just something to watch out for. Next, US dollar against Japanese yen, again similar to Chinese dollars, is sell across the board. Short, medium, and long term is hovering around 103 area. And US dollar is weakening. I think the Japanese yen will go on break above that to maybe towards the $100 mark, or 100 yen mark. And again, that means what? Japan is also very much exporting things. That makes Japanese stuff more expensive. So basically, all those countries like similar to Australia, it make their export less competitive when compared to US products. And we'll just have to wait and see how that will work to their own country. Next is British pound against Japanese yen. Buy across the board. Medium term is buy. Have changed from last week neutral to this week to buy. Short term is a buy. Long term is also a buy. And similarly for British pound against US dollar, buy across the board. So with the Brexit that happened, I think people are in general are optimistic of British pounds getting strength, but also helped by the US dollar weakness. But I think it might be just temporary because we still have, COVID-19 to deal with. New variants of COVID-19 detected in eastern border of the countries and spread into London and spread into north of the country as well. And with, of course, the Europe also caught some of that as well. So we just have to see how British pound will play out in the next couple of months. Next is Bitcoin, which I said earlier. It's basically done tremendously. So over the last month or so, it moves up, almost like 10,000 pounds or something. I haven't looked at the chart yet, but it's basically broken above the 30,000 mark. As far as I understand, I've gone up about 30 to 34,000 dollars area. So it's buy across the board, short, medium, and long-term buy. Like I said before, the parabolic moved, like 60 degrees, 70 degrees up that way. Never ends well when the fun runs out, so to speak. So watch out. But when the fun is happening, when the gravy change is happening, follow your rules. Don't get out, and until the trend bends, so to speak, and bite your back a little bit, and you give back a bit of profit. And as far as I'm concerned, those giving back a bit of profit is fine because I could never tell when the market turns. And that's why I use consistently using a systematic approach, because I know one thing. I know that I don't know. I don't know damn anything. And within a system that is mathematical based, I can definitely use my system to set things to, so to speak. Next in the list is TLT, the iShare 20 TLT ETF. Short term is a buy, medium term is neutral, long term is a sell. One thing you need to watch out on that one, I think, I'm not sure, I've mentioned the last month or so. It basically the price is below 200 days and 50 days moving average. So for long term wise, it's been sell for the past month, I believe. Yep. And it's more like end of November. Yeah. So about a month or so. And what basically that means is people are basically getting out of the TLT. People are selling it. So which is also boiled down. You see the price of bond, the U.S. bond, is getting higher and higher. That basically also showing that there's a risk of more high interest rate coming over. And we just have to wait and see what happens. But one thing people have been talking about for years is the collapse of the bond market. And as the chart actually says, it's below 250-day moving average already. A simple 50 days over 20-day moving average we've caught it. And especially, I think just starting for the past month or so still room to go. As far as I'm concerned, watch out if the US dollars continue to weaken. The US have to pay a higher price for the issuing bonds for people even buying it, but that means it costs more for the US government. How does that going to work out? I don't know. We just have to wait and see. Next is, of course, is the Tesla. It's buy across the board, short term, medium, and long term. On Saturday, there is a piece of news from Tesla that is able to sell, I think is aimed to sell 500,000 cars this year. Just shy of that, and like 400, 500 cars shy of 500,000. So more or less, as far as my book's concerned, they hit the mark, and they also start producing the Model 3, I think, or Model Y, I think Model 3. From China, not just selling in China, but then actually send it back into Europe to sell in Europe as well as US, I believe. Or you can Google search it and you find it. I think the piece of news just came out. So Tesla over time, this year, 2020 or past year has gone relatively great and split, 1 to 4, that kind of things. And I think we just have to wait and see what happens. But for anybody who owns Tesla, that's another piece of news from BBC. People have been saying, people is buying Tesla in America and become millionaire. I mean, when this kind of news comes out, as far as I'm concerned, it's very much like .com. People buy certain shares, become millionaire, blah, blah, blah. And it is sort of telling me near the end of a bull run on the Tesla shares or in Tesla, in this particular one. It could still have legs, but as far as I'm concerned, when all these people suddenly shows up on news, or news suddenly share the piece of information that, oh, look, so many people become millionaire buying this share, that share, or that instruments is for me is a piece of contrarian news that is near this end game, so to speak. It's about to turn, so do watch out on Tesla. Next is Australian index. Basically, is short term is a sell, same as last week, and medium term is neutral, long term is a buy. So, overall, I think it probably has issue with obviously with China, but the strength of the Australian dollar is not helping it. I mean, Australia export a lot of its own stuff to Asia, China in particular. And with the US dollar weakening, Australian dollar strengthening, it does make this export a lot more expensive. I think it shows up on the Australian index. We just have to wait and see. Last but not least is Alibaba. Sell for short term, in terms neutral. Long term is a sell. Last week, I saw start covering it and the devastation news of Chinese government trying to tighten what Alibaba and Ant Group is doing. But I think those are long term coming. You listen to my previous podcast about the thing about Ant Group and stuff. The Chinese government did and has been planning to look into how to control the online e-commerce scene, in this case on a financial thing, lending people money, micropayments and so forth. Micropayment, I don't think, not the micropayment, the online wallet kind of things, I don't think China have anything wrong with that. I don't see any problem with it. It encourage, you go to China, you see a lot of people using the phone to pay everything, and a lot of it is, I think most of it is either Alibaba, Alipay, or the Tencent or WeChat kind of pay, that kind of thing. And very much a cashless society. I don't think China is going to stop that. But what the Chinese really want to look at is how Ant Group is stepping on the toes of the banking industry, selling, giving short-term loans, and not being regulated by the financial regulator in China. And it's really worried that what happens if it collapses, and the risk that it take on. Okay, the Sesame Seed credit system is great. It's probably better than other credit file system in Europe, because the Chinese just use everything online, so it does left a digital footprint, sprinting footprint for people to put algorithm on it, engage it, and give you some sort of a credit score, so to speak. But from a banking industry point of view, it has to balance the risk. You might have a good system rating a particular customer, but you still have to worry of, this person might hit hard time like anybody. Look at COVID-19. A lot of people working before suddenly a disease comes in, loads of people can't work. And it's not because of the ability not able to work or not good, whatever the job is, just like the general market is shut down because of a virus. What can you do? And for Ant Group not holding of any of this risk or being regulated by the Chinese financial regulator, is a big risk for the Chinese government. Remember here, China is more or less 3-4 times the size of US, and if US have a problem with subprime, and if the similar things happen in China, it's going to be that bad, even worse. Okay, 4 or 5 times worse. And remember what Ant Group is lending people. Okay, part of it is not just payment, using online cashless payment, but lending money, lending in 2 forms, like a short-term credit card, like a Visa card, so to speak, and a short-term loan. This short-term loan may be small, as far as I understand, it's like $2,000 or something very small. However, because a number of people actually get involved in China using it, and if pandemic happens, lots of people can't pay, what happened to Alibaba then, Ant Group, and what happened to all those people who, all the banks, I think about 100 of them, pay, sort of subsidize that, or sort of worked with that loan thing, providing the loan, and Ant Pay basically just kick a cut of it. So Ant itself probably is not going to take a big hit, but for banks, it will be a big hit. And the regulator in China haven't put out some sort of regulation to say if you buy any for the loan from Alibaba or Ant Group, then you only allowed to buy, let's say, 100 million per a bank or something, rather than unlimited, that kind of thing. We've seen the type of people we talk about here. That's not talked much about in the West or at all, as far as I'm concerned. These are the people that couldn't get traditional banks to lend them money. Now you might say, yes, these are the small fries, small enterprises that banks normally don't even want to lend to them because they're too small. They haven't got anything collateral for the banks to hold on to, just like traditional lending. But also it's cover the subprime market. The people have bad credit. They couldn't get any loans from the main street, from the main banks, and also therefore go to Ant Group and get some money. Okay, I know, okay, fine, it's very small, $2,000 so forth. But if many of them actually go in and able to get loans, the short-term loans, small loans from Ant Group and Alibaba that way, and then Alibaba just passed the whole loan thing to the banks. It's just similar to what happened in the subprime market in US, when loan provider provide the loan and then quickly packages and sell it as a fund or funds, whatever, as a bond, and sell it to investors. No difference. The only difference is in America is doing it with the houses, which talk about a lot more money. In China, it's a lot smaller. You're talking about just normal credit like $2,000, not much. But the size, the number of people Ant Group actually use and provide the loan to is much higher, much higher, and it's going to devastate the China financial industry. With pandemic causes a whole shutdown in the whole country. You see it. China has been shut down for like 76 days, so Wuhan, or 2 months, let's say 3 months. But you look at America, look at Europe, been shut down for much longer than 3 months, and the devastation the pandemic can happen on people's jobs. And if that happens in China with so many people out of jobs, it's not just about instability of the financial system. We're talking about maybe uprising. Okay, people without job, without food, will blame the government. The Chinese government want to back in power. You think the Chinese government, being a dictatorship there, will allow instability happens? They want to be back in power. As far as they're concerned, I see that the way they're doing is it's very similar to Singapore. Basically, I think it's just borrow relief from Singapore, providing the government give a stable environment, a good environment, a reasonable setup for the country, people to buy and sell things, so it's prosperous, to make money. People in general don't really want to talk about politics, especially Asians. We talk about money more than aspiration to be involved in politics, that kind of thing. So, but the Chinese government can only do that if the financial industry or economy in general is stable. That is, everybody got a job, it means to support themselves, able to buy things, and able to send the children to schools and afford to have a holiday here and there, kind of thing. It's just the same for any countries, but for China, it's much more acute. They know very well. I've seen, observing what the European have done, what the American have done, and they don't want that kind of devastation, financial upheaval like back into 2007, 2008, the subprime market happened in China. And it's going to be not unstable, like I say, for the financial economics, but also unstable for politics, so to speak. And China's government is going to have it. And as far as concerned from that front, if you look at Alibaba, it is still a great company. It's got to be, more constrained of what it can and cannot do within China. But I think the reach of the Alibaba and the distribution network they used to send things around, and so it probably get regulated a bit more heavily. But I think Alibaba still got a good chance to continue. But the other thing also not talked about much is Alibaba also support a lot of people from outside outside China to sell things into the Chinese market, namely from Europe as well as America. I think quite a lot from America as well. And given America, I know Donald Trump is about to get out the White House soon. The the Trump government has always been trying to, stopping some Chinese company from advancing in U.S., but it didn't touch Alibaba because he never dared to, because it's a lot of people buying, selling things using Alipay, Alibaba stuff, selling things into China. It's his own economy there, so it's not going to, touch it. So on that front, I think. Alibaba still have a life within U.S., but given the administration, the Trump administration have done, even though it passed on to Joe Biden, hopefully within the next couple of weeks, and then we still see the possibly pushback from China. I think Alibaba probably, this is why I have the second listing in Hong Kong, is slowly moving its main operation back into Asia. But overall, I think it still will try to buy and sell things, allow people from overseas to sell into China, from China sell over to overseas. So I think Alibaba still has legs, but for the time being the price is below 50 days into a day moving average, I think there is a good chance that it will continue. It had tried, I think, over the last week to go back above the 200-day moving average, but it failed. So I think this is a great sell opportunities. If you can sell into strength and borrow a share and sell it or spread better, whatever, this is one of two to watch out for. I think there's definitely a lot more to go for the downside for Alibaba yet. But I think Alibaba will survive, but how much further down it go down, I don't know. So we just have to wait and see. Basically, that's the end of my podcast for this week, and I hope you all have a wonderful 2021, and I'll speak to you next week. Bye for now.